Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we're looking at this morning. So clearly, once again, we're getting quite a weak handover from Wall Street. And on the back of that, you have all of the Asian markets which have opened with cuts. So Hang Seng is actually seeing the worst cut right now. It's up on your screen, 220 points gone on the Hang Seng market, so over 1% lower there. Taiwan is seeing a cut of around 0.7% as well. And some of the other Asian markets, so whether it's a Kospi, whether it's a Straits, all of those down between 0.4 to 0.6%. That is the kind of cuts that you're seeing coming across Asia. So Hang Seng is clearly the worst, but the rest of the Asian markets also seeing some cuts. The SGX Nifty will come up for you, and that is looking a lot better. So that is still indicating a positive start. Around 30 points higher is what we have on the SGX Nifty. That's what's happening in Asia, but let's also talk about the US now. Wall Street saw a volatile trading session, so the Dow Jones closed largely flat, S&P 500 slipped over 0.5%, and the Nasdaq fell over 1% at the close. CNBC Seema Modi is here to bring us a wrap of all of that action from Wall Street.
Wall Street choppy session for the day as stocks midday were erased by the time of the final bell. The afternoon downturn was triggered by a warning from the Bank of England that the country's pension funds needed to rebalance by Friday when the central bank's emergency bond buying program will end. The Dow finishing narrowly up, the S&P 500 dropping more than 0.5%, and the Nasdaq falling over 1%. Meta was a big drag on the markets today as the stock fell around 4%. The tech company announcing its next mixed reality headset today in the gaming and practical applications. The new Meta Quest Pro will cost $1,500 and will begin shipping later this month. Meta has struggled recently with revenue growth, and the stock sits near its one-year low. That's the action from the U.S. Back over to you in Mumbai.
All right, Seema, thanks a lot for getting us all of that action from the U.S. markets. In fact, let's also bring you some opinion. U.S. economy is doing well amid global economic uncertainty, says Treasury Secretary Janet Yellen. She also acknowledged that inflation is much too high and lowering it remains a priority. So listen into that.
From the perspective of the United States, I think the United States is doing very well. And we had an employment report just last Friday that shows we continue to have a very resilient economy, an economy, of course, that's slowing. We would expect slower growth, but, you know, we still had over 260,000 jobs last month and have a very strong job market, although we're beginning to see some signs that pressures in the labor market are easing. So I remain encouraged. The U.S. economy is strong. Different countries face different stresses, but the IMF has downgraded their outlook for growth in many parts of the world. I think much of the strain we're seeing reflects the impact of Russia's brutal war against Ukraine, which has raised energy prices. Of course, he's weaponized natural gas, which is causing huge price spikes and energy strains in Europe. We still see the impact of COVID in China and the slowdown in Chinese growth. And with high inflation and tightening monetary policy in many advanced countries.
All right, that is U.S. Treasury Secretary Janet Yellen talking about how U.S. is faring amid this global setup. But a key talking point as far as the global markets go has also been the strength that we've seen in the dollar. So the dollar index is currently at around 103. We spoke to Ruchir Sharma on the strength that we're seeing in the U.S. dollar. Listen in to what he had to say.
I do feel that the dollar is close to a natural peak anyway, because it's so grotesquely overvalued, right, that it's close to a natural peak. But the problem is that every day that this goes on, you're adding to the financial stress in the global economy unnecessarily, because the tightening is going on. That's an inflation objective. And yet by not intervening and letting the dollar surge continue in this way, you're just adding to the stress of the global economy. You've got countries around the world which are reeling from this stress. So this is a great time for the US to show leadership and engage here in a coordinated central bank intervention move. And the Treasury has to lead it, because I think a very important point here is that the currency policy is led by the US Treasury, and the Fed acts on that.
All right, that is the word coming in from Ruchir Sharma, and that's what we're tracking as far as global markets go. But let's also talk about all of the individual cues that you should track as we get into a fresh trading session. Vivek, Vahishta and Mangalam all join me now to take us through the trade setup this morning and some of the individual stocks as well that could be in the news. Guys, a very good morning to all of you. And Vivek, let me come across to you first. We were just going through the global setup, which once again does not look supportive at all.
Well, absolutely right. In fact, most of the US markets gave up all of the early gains yesterday and closed closer to the day's low. In fact, the Nasdaq continues to trade at a fresh 2-year low, and this is something that is worrying market participants. When you're coming, closer home, especially when you're talking about the cues, crude prices on a positive note actually fell down quite significantly, and this is something that Indian market participants will take a little bit of heart from. When you're talking about some of the key factors to keep an eye out for, remember, you're talking about actually the data radar for today. You're talking about the CPI data that is due for the month, and you're also talking about IIP data. So IIP data, when you're talking about it for the month of August, is something that we are tracking at this point of time. You're also looking at Asian markets today that have opened up. Asian markets today have opened up on a very mixed note. In fact, when you're talking about the Japanese yen, it's again trading at a fresh low. This is something that market participants are tracking and expecting some action from the Bank of Japan. Also, when you're talking about some of the other Asian markets that have come back from multiple holidays that they've enjoyed, Asian markets today have shrugged off some of the worries that they've seen from the US markets as well as the Europe markets overnight, trading with slight positive gain. SGX Nifty, in fact, is indicating a positive start. Whole host of results today, so the IT pack will continue to remain in focus as far as the earnings season and Q2 is concerned.
Oh, absolutely. This entire week is going to be about IT. Vivek, thanks a lot for getting us all of those cues that we should track. Let me also bring in Vahishta. Now she's looking at all of the individual stocks that we should keep on our radar today. Vahishta?
Hi Pavitra, good morning. The first stock is L&T Finance Holdings, which has received an approval from SEBI for the sale of 100% shareholding in its subsidiary L&T Investment Management to HSBC Asset Management. The next stock is Suzlon Energy, which has received an order for the development of 145 megawatt wind power projects for the Aditya Birla Group. The next is Delta Corp. When they released their Q2 FY23 numbers on a consolidated basis, the revenues came in at 270 crores versus 75 crores in the same quarter of last year, and PAT has also come in positive at 68 crores versus a loss of 23 crores in the same quarter of last year. The company says that the business is now resilient and has bounced back even stronger and has surpassed the pre-COVID period numbers. The next is Genesis International, which has bagged an Andhra Pradesh government mapping project whose order value is at approximately 45 crores. For Gujarat Pipavav, a Q2 FY23 business update says that the container volume is up approximately 19% on a year-on-year basis, but is nearly flat on a sequential basis. Indian Railway Finance Corporation has signed a memorandum of understanding with India Infrastructure Finance Company to strengthen the cooperation with financing railway infrastructure projects. And for Infosys, the president Ravi Kumar has resigned. And in terms of result, we have HCL Tech and Wipro coming today.
All right, Vahishta, thanks a lot for taking us through that entire list of stocks that we should watch. Finally, let's also bring Mangalam in. Mangalam, we saw, a sharp sell-off in the last hour. So take us through all of the cues from the futures and options space.
A 280-point sell-off is what we saw in the last hour from the highs on the Nifty itself. And if you just take a look at the data that came in, FIs are selling lock, stock and barrel, 4,600 crores in the cash market in yesterday's trading session. The DI has managed to buy just around 2,400 odd crores. In fact, this number is the highest that we've seen in this month, or highest all the way since September 26th. And in just the last 3 trading sessions, the FIs have sold over $1 billion, 9,000 crore rupees in the cash market. And why just the cash market? Even in index futures, the FIs have sold over 1,000 odd crores in yesterday's trading session, added net shorts of almost 11,000 contracts. That's unwinding 5,500 longs and adding 5,500 shorts as well, as a result of which their short exposure has increased to 85% and longs have dropped just to around 15 odd percent. The only participants which are long, net long in index futures are the retail investors, which are long by around 69%. And yesterday, over and above selling in cash and in index futures, they also went ahead and wrote 95,000 call contracts. Between 17,000 and 17,200, we've seen almost 1 crore shares in open interest written. So that means there are hurdles on the way up, despite the SGX Nifty indicating a bit of a bounce. But if there is a bounce, this is the place where it has to bounce from, because the 200-day moving average on the Nifty is at 16,986. And also at the same point, the India, put-call ratio is at around 0.7. Usually the put-call ratio, when it comes closer to 7, we do see a bit of a bounce. Let's see whether that bounce comes by or not. But currently, all the factors are indicating weakness.
All right, let's see how the trading session pans out. For now, the SGX Nifty also, by the way, has moved down in the past couple of minutes. So it's currently just around 15 points in the green. Okay, it's moved back a little bit right now, but just around 30 points in the green is what we have on the SGX Nifty. And you can see that it has slipped significantly this morning. But that's what we're tracking as far as the market cues go. Guys, thanks a lot for joining us and taking us through the trade setup. With that, it's time for our first short break on the show. Welcome back. You're still tuned into Power Breakfast. Now, an important news piece that came through yesterday. Global agencies continue to downgrade India's growth forecast. And the latest in this is the International Monetary Fund. So forecast for FY23 has been steeply cut to 6.8% now, which is lower than the RBI's own projection of 7%. The IMF says that the downgrade reflects a weaker than expected outturn in the second quarter, as well as subdued external demand. Now, India's growth has been seeing some slowing, and it's currently expected to move to 6.1% for FY24 and then seen at 6.2% over the medium term. These are forecasts from the IMF. Inflation is seen averaging 6.9% in the current fiscal before it eases to 5.1% in the next. And the current account deficit, that is seen at 3.5%. This is for FY23 and then 2.9% the year after that. While the global growth forecast for this year is left unchanged at 3.2%, next year's forecast has been cut by 20 basis points to 2.7%. So those are some important updates coming in on the global growth as well as India growth forecast from the International Monetary Fund. But that's what we're tracking as far as the macros go. Let's also, talk about some important earnings that are due today. It is all from the IT pack. HCL Tech is due to report Q2 numbers later today. So Rima is joining us to take us through the expectations. Rima, good morning.
Hi, good morning. So dollar revenue growth is seen up 1.5%. In constant currency terms, it should be a growth closer to 3%. So similar to what they reported last quarter. Margins are ticking up by 40 basis points. 17.4% is our poll. The reason why we're not going to see a big margin expansion, that's because the company doled out wage hikes for its employees effective 1st of July. So despite improvement in utilization, the rupee depreciation, the benefit on the margins is going to be limited due to wage hikes. The key in the case of HCL Tech is going to be its full year guidance. Do they hold on to its revenue guidance of 12 to 14%? The street believes so. And what about its margin guidance, which currently stands at the lower end of 18 to 20%? Well, the street believes that perhaps they may not tinker and they will maintain this margin guidance of 18 to 20%. But many estimates on the street are already below, 18%, which means the street believes that HCL Tech is going to find it hard to meet its margin guidance. So, the guidance on margins is going to be very crucial.
Right, Rima, thanks a lot for taking us through all of those estimates. In fact, you can catch the management brief the press later this evening at 5:30 p.m. And hopefully we will get those comments that Rima was talking about on the guidance front as well. But Rima, the other big one today will be Wipro. That is also due to declare Q2 results. What can we expect from Wipro?
Dollar revenue growth of 2.4%. In constant currency terms, a growth of 4.2%, which is within the company's guided band of 3 to 5%. There will be that benefit of rising as well as the convergence acquisitions. Margins seen up by 15 basis points, a very marginal uptick on the margins, 15.15. What is the street going to watch? The ability of the company to improve margins from here. Q1 margins were at a decade low for Wipro. The company said that Q1 margins were the bottom. But how much can you improve from that? Because in this quarter, we're only penciling in a 15 basis points margin improvement. The company's medium-term margin guidance is 17 to 17.5%. So, how soon can they get back to improving the margins? That's going to be very crucial. The second is going to be its December quarter's guidance. Now, Wipro typically gives you next quarter's guidance. Kotak expects the guidance to be 0 to 2%. CLSA says it could be 2 to 4%. So something in the middle of that is what the street is anticipating. And finally, one of its recent acquisitions, and a large one, Capco, has a great presence in Europe as well as consulting. And considering that consulting is seen as discretionary tech spend and Europe is weakening, the outlook on Capco is going to be crucial. Back to you.
All right, Shrima, thanks a lot for taking us through all of those estimates from both Wipro as well as HCL Tech. Remember, we can hear from the Wipro management today at 4:30 p.m. So stay tuned for that, and you can catch all of that on CNBC TV18. With that, we're going to get into a short break now. But when we come, welcome back. You're still tuned into Power Breakfast. And as promised, let's talk about the commodity space now. Manisha Gupta joins us. Manisha, good morning. And crude continues to dip.
Well, it does, yes. After last week's huge gains, this week hasn't started well for the bulls at least, and we are down for a fourth straight day today. This is after IMF has downgraded 2023 global growth forecast to 2.7%. You have similar statements coming from the World Bank as well. Higher inflation, tighter financial conditions, recession fears, all of that continues to weigh into the market. And to add to that, the markets do expect that the U.S. inventories will show a build-up. The Chinese big cities like Shanghai and Shenzhen are ramping up COVID testing yet again. The Chinese zero-COVID policy is not out, and that continues to hamper demand too. And even as OPEC and allies have talked about cutting output, they've also said that, especially Saudi Arabia has said, that they will continue to serve Asia at full contract volume. So we wouldn't feel the heat of it, and all the incremental marginal increase in demand clearly seems to be coming in from Asia, and there is going to be no dearth of supplies here. So all of that is weighing onto the market. After that huge run-up that we saw in the previous week, there is clear profit-taking happening right now.
All right, Manisha, thanks a lot for getting us a quick update on the oil markets. With that, we're going to wind down on this edition of Power Breakfast. The Asian markets are all lower, but the SGX Nifty is just about managing to hold in the green. Let's see how the trading session pans out. Thanks a lot for tuning into Power Breakfast. Bazaar Morning Call comes up next.